Now, central banks appear to be on a gold rush. They're now widely believed to be holding as much, if not more, gold than US Treasuries. Well, let's talk now to Susannah Streeter, markets expert at the analytics company Consultable Insights. Good to see you, Susannah. So is this a move by central banks towards gold or a move away from US Treasuries? What's your take on it?
Well, it's a bit of both, in fact. So what you're seeing is central banks, particularly the People's Bank of China, going on this gold buying spree because China in particular wants to nudge the world really away from reliance on the dollar in particular. And we've seen, of course, the dollars fall this year, the dollar index down just under 10%, a really steep fall. And this, of course, has come amid all the trade ruptures that they've been with the new era of tariffs. But also there is concern about the big debt mountains being run up, particularly in the United States. And of course, with the US government shutdown, it's come to an end, but it's really put the focus back on that debt pile. So all of these factors are conspiring to push up the price of gold. We've seen it reach record levels, particularly last month. It's dipped back a little bit this month, but certainly central banks are continuing this spree. China, for the 18th consecutive month, building up its gold reserves.
Well, let's talk about the price of gold. It's been at a record high, of course. How much of this shift is because actually the gold holdings that are being held have appreciated in value rather than necessarily more people are actually buying it?
I mean, there has been central banks buying more gold, but also individuals as well have been pushing up the price of gold. If you look and dip into retail sales figures, for example, here in the UK, there has been evidence that actually gold jewellery sales have been pushed up, and that's been replicated in other countries as well. Simply what you're seeing is that it's not just ordinary investors, but also institutional investors. They are really focusing on the reliability of gold, the fact that it's seen as a safe haven, rather than really wanting to secure in a yield. Because, of course, gold doesn't pay out interest, like bonds. It doesn't pay out dividends like stocks. But because of, it's not just the concerns over government debt being ratcheted up, but also there has been, of course, geopolitical uncertainty, and so gold is really being valued for its durability.
So central banks obviously buying into this idea of the safe haven. Is there any particular area where central banks are buying into this more, emerging markets maybe?
Certainly what you're seeing is China and Turkey, for example, they've been buying up a lot of gold. If you look at China's strategy as well, it wants to build up China, the authorities really want to try and make the world see China as a gold hub. So the Shanghai Gold Exchange, set up a few years ago, really gaining traction and really wants to pull some of the business away from the COMEX, for example, in the United States, but also potentially London as well. And so it's also setting up kind of vaults right across the world, a kind of a gold trail, a gold route, as it were, to try and bolster really the yuan, the renminbi, against the dollar. So all of this is part of a longer-term strategy.
So this is the first time in 30 years that there's been this crossover point. Do you think it's going to carry on growing wider?
I think that, in the past, you can't rely on gold, keeping the value that it's seen. There have been a number of factors really conspiring to see it reach up to record levels. I think it's probably going to be bumping along where we see it right now. Could be a few dips along the way. I don't see it retracting significantly because this whole concept of US exceptionalism has been dented, that the US is somehow unique in attracting investors, and certainly there has been real concern. We talk about valuations, for example, in the AI sphere, a concern about that, and as these jitters continue, I do expect that gold will continue to be seen as a safe haven for investors who really want to diversify their holdings.
Susannah, great to talk to you as always. Thanks for coming on the programme. That is Susannah Streeter from Consultable Insights.